It's Sunday the 29th of September 2019, so this is a video for the last trading day of the month, 30th of September tomorrow. Bitcoin, I sent a special article out last week, and actually it was just maybe half a day before the price broke lower. So I was warning about this big descending triangle here. I was warning about the fact that we were now settling below the important moving averages, and that there was a big risk of a break to the downside, and a break below 9400 would be a sell signal. So if you managed to read the article in time and react to that, that worked really nicely. Obviously we dropped very quickly. We dropped almost 2000 points, call it 1500 points from the break point. So quick profit there. The outlook does remain negative. In the very short term, we're just getting a little bit oversold. That certainly isn't a buy signal, and the fact that we're holding below the red 200-day moving average is more of a negative. So I do see pressure to the downside on the daily chart at least. However, just be aware in the short term that we have held the 100-week moving average. Now that almost bang on, as you can see, 7700 is the value of that 100-week moving average, and we've just bounced off it. So we could get a little bounce back in the short term. I definitely wouldn't be buying into longs. I'm still holding a short position, although it's a very small position. I didn't get as much on as I wanted, so I'm looking to sell into this potential bounce, add to my short position. Now we've got a good long-term trend line going back to the middle of 2017 here, so that's a good 2-year trend line, more than 2 years in fact. That comes in around 8600, so I would imagine that should be a good resistance level on the bounce. Maybe if you're not already short, you could at least start to sell there. On the daily chart, we've got good resistance around 9200, 9400. So I don't necessarily think we'll get there, quite honestly. I think the pressure is so much to the downside that I don't think we'll reach it. So my best suggestion would be to sell, well, if you're really aggressive, you could sell a little bit around 8400, then you could sell a little bit around 8600, and you could save some bullets for 9200, 9400, this area here, where you could get the rest of the position on that you're looking for, and then really you want to be stopping above, say, 9800. So there's quite a wide band there, quite a few levels for you to consider. But if I'm right about this, and we do continue lower eventually, then we should be testing the 500-day moving average around 6700. There's a longer term trend line down here at 6200, and really there's a chance that we could get down as low as 5500 for the total measured move. US dollar index is worth a revisit. Now, it's been frustrating because it's really just been trading in such a big sideways trend for so many months, almost a year now. But just more recently, we're starting to gain some momentum to the upside. Now, it's been difficult, even through this last, let me just open this out a bit, even through this last few weeks. Look at this, and you know, up one day, down the next, up one day, down the next. Really, you could not hold a position for more than a few hours in some cases. If you were winning, you really had to take profit very quickly before the market reversed on you. So very tricky, but we seem to be making some sort of breakout to the top side. Now we beat this big peak up here at around 9900, sorry, 9900. We got up through there. We seem to have closed the week just above it. Now obviously the big one to beat is at 9937. That's the September high. At the moment, if we don't beat that, we've got a potential double top. So this would be quite negative, in fact. So this really is key, and you can see we've even got a trend line going back to May that coincides with that level. So this 9935, 9940 level will be absolutely crucial for the week. I suppose the way to trade it would be to sell it there, maybe with a stop above, say, 99.55, and then be prepared to reverse into a long position if the breakout looks like it's being sustained. That's really the only advice I can give you. But I would love to see this break higher and actually have some momentum to the top side, and actually offer us a swing trade opportunity, something that we can actually run for a few days, maybe even a few weeks. You can see the longer term chart going back to the beginning of last year does show actually that we are in a good bull trend. So we should stick with the bulls, and we should be buying on a break above the previous high. It's just this whole congestion period here of sideways trading, and even through August and September there was quite a lot of sideways trading, as you saw on the daily chart. This made it it made it impossible to hold on to a long position, really. Right, this is the Aussie dollar versus the New Zealand dollar. Now the Aussie dollar has been very weak, as is very clear from this chart. We've been in a bear trend for almost 2 years, so there's not really any reason to there's no reason to bet against the bears. I think they're well in control of this market. We've done well trading the Aussie dollar lately. We've been selling into rallies. It's been fairly simple. This is a really good sell up here, as you can see. And even this week, we sold up a small shorts around 68.00, and that works too. So just selling into rallies has worked. Look for a break below 67.30, which would obviously be the next move to the downside. We've got really important support down here. You could almost call it a triple bottom, but it didn't really materialize because, of course, we fell at the first hurdle up here. But a break below 60, the previous low of 66.75 would clearly be very negative. We're a little bit oversold in the short term, so maybe we won't get that yet. Maybe we'll get a bounce up to 68.00, 68.10, then watch the trend line at 68.35. Further important resistance at 68.75, 68.80. There's a lot for bulls to overcome. I don't think they'll overcome all of those hurdles. And eventually I think we will break lower, but timing I don't know of. So just watch those levels. If the dollar does break higher, of course, that will put renewed pressure to the downside on the Aussie, I would imagine. New Zealand dollar also in a bear market against the US dollar, so we're going to stick with the bears on this one too, selling into any strength. Actually, this one's been slightly trickier to trade because we didn't quite meet some of my sell levels. Certainly at the beginning of the month, we didn't quite manage to do that. But if you have been playing the short game, as I've suggested, then there has certainly been some money in trading this pair. Dollar yen, we've actually had some decent trades. Good support down here around 107.00. That worked nicely, and we pushed back higher, so longs did well. You can see that this level around 107.50 has actually worked quite well to a support. We've got. I'm looking at the hourly chart here, by the way, for the dollar yen. I've been looking at longer term charts for the other markets, but up until now. But this really, you need to be looking at the hourly chart for the dollar yen, and you can see the moving average is working quite nicely. So scalping opportunities only really, but if you're moving in and out of trades on the levels, then it is working quite well. Euro yen very clearly in a bear trend. And when we look at the weekly chart, this actually has been quite a good market to trade too. We've had some pinpoint selling opportunities that have really done well for us. If you look, you can see that the Fibonacci levels are holding very nicely indeed on the daily chart. And actually, if you go to the hourly chart, which is where I'm getting most of my trade ideas from at the moment, we've been working well. 117.40, 50-40 area worked on the downside. On the bounce, we had good resistance up around 118.40, 118.50. That worked well on Friday. So yeah, I think for yen trading, we have to look at the shorter term charts to get the best trading opportunities. Euro tricky in a similar way to the trading the dollar index has been tricky, but certainly when you look at the daily chart, you scrunch it up, you can see that we're very clearly in a bear trend, and more recently we did break previous lows that we had put in September down at 109.25. Now we got down as low as 109.03 on Friday, so anyone looking at the daily chart will be thinking this looks pretty negative. I definitely want to be short this pair. Bear in mind we do have a mildly bullish candle here with this lower. We broke to a new low at 109.03, but then we closed higher. So there's a mildly bullish candle there. We're not oversold. We're not particularly oversold at all. So that is not bullish. But then you have to look at the longer term charts, because here we do have something quite significant. We do have a trend line going back to the end of 2017. So that's nearly 2 years old, that trend line, and it really is a nice one. Look, we held it nicely. Well, we drew the trend line on this point here, of course, held it nicely. In late 2018, held it again in September when tested twice at the beginning of the month, and we seem to be holding it again at the end of the month. So this is absolutely crucial. It is around the low 109.00 area, and we are holding it. So right now, shorts actually look risky when you look at the weekly chart. When you look at the daily chart, you wouldn't really want to be long, but when you look at the weekly chart, you really would want to be covering short positions, because there is certainly a chance of a significant bounce. So we're at a pivotal area. A significant break below 108.90, I would suggest, would be a strong sell signal. Okay, gold's been quite interesting. Lately we've had an enormous run up in gold, of course. I think we've caught most of those moves. We were certainly buying breaks above important levels, and we were spotting consolidation patterns which indicated that gold would continue higher. So I think we've done quite well out of the move up in gold. But the end of August, beginning of September, we spotted these negative candles which suggested that the rally was over. And we got that right. The rally certainly has been over. Now, we've had some bounce backs which have surprised me. So the bulls haven't given up. They are trying to push this market higher occasionally. You can see candle A, not quite not an engulfing candle, but certainly a negative candle. And then this one, the shooting star, more negative. And we've had some big red body candles as well on the weekly chart. Now, as I say, we have had the odd spike up, which has caught me out. This on the 12th of September caught me out. We went way higher than I expected before we reversed. We've had a good climb back. Now, in my report, I've suggested that this could be a head and shoulders pattern building, a negative head and shoulders pattern building. This trend line here, let me just open this up a little bit. This trend line here is not the neckline to the head and shoulders. So I've seen some people draw this on Twitter as the neckline to the head and shoulders. I don't believe it is, but it is still a significant trend line, and it did hold. Now that's around 1485. So a break below here would test what I think is the neckline to the head and shoulders. I need to open this up so it's more clear for you. I believe that this is the neckline to the head and shoulders down at 1475. So I think we need a break below 1475 to confirm the completion of the head and shoulders top. And this could easily send us down 50 or 60 points from 1475. So we could easily be down testing the 100-day moving average at around, which is now at 1423. Of course, it's rising, so by the time we get there, it'll be a little bit higher. Might be around 1430, and we could even test the 50% fib, which is down here at 1415. So there is a significant potential move to the downside on a break below 1475 if I'm right about this being a head and shoulders pattern, and I do believe that I am. I do believe that this is starting to turn into a I do believe that gold is starting to reverse anyway. What would change my mind? Well, certainly we'd have to initially get up through 1530. That's the first trend line. And then, of course, we'd really have to get up through the previous peak of 1557. There's always a double top risk there, of course, if the sellers really can regroup on a bounce as far as there. So it's only really above 1560 that I would start to be bullish again in gold. Silver, similar picture. We've got some very negative candles. First week of September, this shooting star candle, very negative, followed by a big red body candle. Managed to consolidate a little bit in more recent weeks, but even last week, the gains could not be sustained. In fact, I think we had a selling opportunity up there around 1870, 1880. So I think we caught the short on that. So that looks pretty good. If you're still holding the short, I think you're doing the right thing. I think silver can break lower. We seem to be developing some sort of bear trend. As you can see, this little trough down here at 1728 is lower than this one. And of course, we've got a lower peak from the last peak in September, in last week, was way lower than the peak at the beginning of September. So this certainly could be the beginning of a more negative trend for silver. If you want a daily technical analysis and trade signal report on all your favourite markets, go to daytradeideas.co.uk. If you are quick, I'll give you a free 2-week trial of our service if you email me here at jason@daytradeideas.co.uk. I'm just running I don't normally offer free trials. This is a one-off, so contact me quickly and I'll give you a 2-week free trial of our service.